Do you think that LNG gets wrapped up in the trade war?
It doesn't matter.
Why not?
Because we need to sell it and they need to buy it. And we're turning it into a real commodity business. So once it leaves the shores of the United States, if China wants it, it'll find its way to China.
Do you feel like we're going to see more price competition, though, because of that? I understand that Henry Hub is so much cheaper than what you're seeing over in Asia in terms of pricing, but still.
The central issue is still that there is a demand for the product, but the infrastructure is extremely expensive. So we have not yet figured out what is the model that is going to allow us to build the next wave.
And it's a good point, because part of it is the old school is that you go to China, you secure a nice long-term contract with a Chinese producer, and then you wind up selling their LNG to them, and that helps you wind up building the pipeline, it helps you wind up building the export terminal.
So let me put it in perspective. Between 2012 and 2015, we signed 60 million tons worth of contracts for the United States, maybe 70 million tons. And from 2015 till today, 1.2 million tons. So it gives you an idea of how difficult it is.
But we also see there's a CEO yesterday from liquefied natural gas, Greg Vesey. He said that he's waiting, that buyers are waiting because of the trade uncertainty. If buyers wait, how do you build the terminals?
You have to figure out a new business model.
You fix it. So okay, so but that really feeds to Tellurian's business model, meaning that you need to avoid the longer-term contracts to avoid the macro issues?
Look, if a longer-term contract would come, we would take it. However, in a commodity business, why would you sign a 20-year contract for anything? You no longer fear not getting the molecules. You know that you can bid every day. There is 15 cargoes to 20 cargoes for sale every day. There is 300 cargoes on the water full of LNG. If you're in a bind, you make a phone call, you pay $2 more and you get it. So there is no incentive for the buyers unless they're so massive that they have to work on their logistics.
Wouldn't China be considered massive, though? Yes,
but they don't know it yet. This is the second year where they're going at such a fast rate.
So does that mean that you'd be more apt to sign like a 2 to 5 year contract with like Pakistan or India versus a 20-year with China?
Not at all. We think the key to the success is to bring the potential buyers, China or somebody else, as partners in the project in the United States. Our value added is we know how to do business in the United States. We can offer them very cheap gas, very cheap liquefaction, and a way to put the pipeline infrastructure together and finance that in order to get the gas from the field to the terminal. On that basis, we can save them a lot of money, and they can be our partners and benefit from any kind of cost advantage that we have. In a commodity business, it's crucial.
That sounds a lot like China's one of the equity investors that are looking into your proposal.
I don't particularly care.
But okay, where are you in your equity investors?
Well, I think from a Chinese standpoint, they're afraid of what are the repercussions of the trade wars. So they're more skittish. But there's plenty of other people who want to take their place. So it's not a big issue.
When I talked to Meg Gentle, who's the CEO, about a month and a half ago, she said that you could count them on 2 hands how many equity investors were interested. What about now? How many hands can you count them on?
I need your hands.
Oh, so there's a lot more. Oh. Who are the most interesting partners for you?
There's 3 types of partners that are very interesting and very intriguing. One is a global utility that needs the gas on a large scale. If I were a small utility needing 1 million or 2 million tons, my advice to them would be stay in the spot market. Don't worry about trying to commit yourself to very large investments. The spot market will take care of you. But if you're a large utility and you want to secure cheap gas for a long period of time, you have the ability to own your reserves in the United States, which you don't in many places around the world. You understand the rules and the regulation. It's pretty transparent. As bad as we try to make it sound sometimes, it's not true. We're very predictable. We have rule of law. We have courts. We have the ability to own stuff. The records are impeccable. We have all the information. So this is a tremendous advantage. Then you have to build the infrastructure from the field, the Permian Basin or the Haynesville or the Eagle Ford, and bring it to the facility. Traditionally, it was going to New York and Chicago. Now, New York and Chicago have plenty of gas, so we need to bring it to the coastline. That's another investment that is necessary. You give this to your partners, and on top of their cost of capital, they can be on the water for $3. It's a very low cost, comparable to Russia, comparable to Qatar.
So utilities was one type of business. What are the other 2 types of businesses?
People whose business it is. So you have an existential issue if you're a major. Where do you invest your money? So the majors have an interesting problem today. for the first time in 5 years, they have money. 5 years ago, all they were worried about is how do I pay my dividends? And do I have to borrow money to pay my dividends?
Exxon's still worried about that, but the other majors maybe not.
Yeah. So, but today they're sitting in a situation where I have some excess cash flow that I need to reinvest. Where do I reinvest it? In a world that is now shortened. I used to be able to do things based on 20-year view. Today, the volatility, what you were talking about earlier, is so fierce. And the time frame is so short that I need better returns for a shorter period of time. It is the investment in infrastructure in the United States is comforting from that standpoint.
So majors, utilities,
and global players. So if you have a global commodity like Glencore, Vitol, or Trafigura, they also want to. That's their nature, the nature of their business. So they are in the business of being the intermediate between the supply and the demand.
A quick question: if any one of those were Chinese companies, would you be apt to say no because you don't want to get wrapped into trade issues?
I don't say no.
Okay.
Okay, I am open-minded to everybody. I'm happy to take anybody. Now, if the government says no, that's a different story. I live in America. I have to live by American rules.
Are you worried about that? Are you worried that if a Chinese partner
course.
for equity investor comes in and then the president will say, no, you can't do that? It's
one limitation. It's not very important for us because we've got a lot of demand. It doesn't really matter. But I think given that China is just in the process of overtaking Japan as the largest LNG consumer in the world, it would be a pity to exclude them. But, and then the third type of customer is the American producer that cannot avoid doing something with his gas if he wants to produce his oil. So if you're in the Permian Basin or in the Bakken or in the Scoop Stack, and you're starting to have some very significant oil production, and it's $60, $70 a barrel, it's looking very good for you for the next 5 or 6 years, what are you going to do? Start flaring? I hope not.
Maybe they're going to pay you to take it for them, and then you can go ahead and export it.
Would you like to be my agent?
I'm just saying, maybe it'll happen,
Alix,
maybe not.
your idea. Great.
Okay.